Buying an RV lot. The things you need to know. Well, this is kind of a revision, a 2.0 to a video I did a year or so ago about looking at RV lots, specifically in the state of Florida, and the parameters, the details surrounding it that you're going to need to know if you're considering buying an RV lot. An RV lot is usually a concrete paved pad that you can park either your motorhome or travel trailer on. It has full utility hookups, electric, sewer, water, and you buy it in a community. It usually has a HOA, which stands for Homeowners Association. You pay a fee. They usually take care of the common exterior areas. They usually have a pool and different amenities. But surrounding these type of properties, these RV lots, there's a couple different things when purchasing them versus purchasing a conforming traditional house or condo. I owned a condo for 15 years. I had a mortgage on it. And now as I look at RV lots, and I've done even more research than on my original video, I have some additional information to share with you. So in my original video about buying an RV lot, and specifically in Florida, but I think you can apply this to most areas in the United States of America, is you have to understand it's a non-traditional, non-conforming property, so banks look at it as a more risky investment when giving you a loan. And banks take loans and they package them together and they sell them to other banks. So when you have this more risky, non-traditional loan, they can't package it up in traditional loans for a single family house or condo. So there's less banks that will give loans on these properties. And some of these properties, you may not even be able to get a loan. So it's either going to be a cash purchase, or you're going to be able to get a loan, usually with a local bank. You're usually going to have to put a higher percentage down, and it's usually going to have a higher interest rate. So example, there's an RV lot I'm looking at in Florida by the beach. It's listed around $100,000. You have to put 25% down. A standard house, you could put as low as 3% down if you got a federally backed loan, FHA or whatever it may be, which I had on my condo. But for this, you're going to need at least 25% down, and you're going to have a higher interest rate. Right now, as I make this, it's April 2019. The interest rate they quoted me was 6.3%. So for a standard conforming house, the interest rate, depending on your credit and different things, would be 4.5 to 5%. So you're paying about 1.5% to 2% higher than a standard traditional housing loan because it's a more risky investment. And the max loan length you can go is 10 years. So you're going to finance $100,000. Well, if the purchase price was $100,000, you're going to put 25% down, $25,000, and you're going to finance the additional $75,000 that is left on the property. You're going to finance it over the course of 10 years. You can't do a 30-year mortgage with most of these. And the property, the RV lot, cannot have any fixed item on it, even a shed. So if you had a shed that was anchored down to the ground, they will not give a loan on the property. If you had a mobile home that was anchored down to the property, there would be a lot more restrictions, and in many cases, they wouldn't give a loan on the property. They want the lot to be vacant, pretty much, depending on the area. If it's in a flood zone, especially with Florida, with hurricanes, you have to be mindful. And if it's in certain areas where it's a liability to have things on the lot, they want it to be used for the purpose of an RV lot, meaning that anything on it can be moved if there was a hurricane to avoid damage. So you can't have anything on the property, even a shed. For most instances, every situation is different, but I'm giving you general information. You have to put 25% down. You'd have a higher interest rate. And, those are some things to consider. It's different than a conforming house, but not necessarily bad, just different. The final thing that I reflect on and that I want to share with you and that you should think about is these are basically vacation or retirement type purchases, meaning most people who purchase these lots are retired or using it as a vacation home or going to rent it out as an investment. So what you're doing is you're buying a piece of property that has less demand. So you may say, oh, I can buy a piece of property for $100,000 and a house in that area is $300,000. But there's not as many people looking to buy a non-traditional, non-conforming RV lot. Most people who buy homes are families. You know, they have a kid, they have family relatives they want to entertain. And that's why the banks stretch those loans out. That's why they'll give them a lower interest rate, because they're a less risky investment, because the mass population, the majority of them want a single family or condo type house, a traditional house. A fewer pool of people want the non-traditional, non-conforming RV lot. So what that means is when you go to sell it, especially if the economy is a little bit shaky and not booming, that RV lot is not only not going to appreciate as much as a regular house. If times are slow, you may not be able to sell it because there's less pool of people in society looking for that type of lot. So that's why it's more risky. That's why banks put a little bit different parameters around buying an RV lot, because it's a riskier investment. And you, as the purchaser, whether you get a loan or you pay for cash, you have to accept that it is a riskier investment. And you have to be mindful of that, especially if you're buying in good times, when the economy is good, which currently, as I make this in general speaking terms, the economy is good, real estate's up. So you'd have to be mindful. As always, live below your means. That should guide your light. Have an emergency fund that should guide your direction. But I wanted to share with you some more insights, because for me, after owning a condo, I have no desire to own a condo, to own a single family house. And I don't even know if I have a desire to be anchored down to any property, because it's such an entanglement. Even after speaking to the loan officer, if I would get a loan on it, they just run through the whole gamut. It's just a whole process. You also have to consider, you're usually, like most properties, going to need about 3% towards closing costs. So if you bought a RV lot for $100,000, you put 25% down, you put $25,000 down, and then you're also going to have to add on 3% closing costs of the sales price, so another $3,000. So you're coming out of your pocket, let's just say $28,000 and round it up $30,000. And then, you're paying off the loan within 10 years. You can do different, like, what they call like ARMs, or get a low introductory rate with a 15-year amortization, which means you lower the payment, but then after like 5 years, you have to pay it all off or accept a higher interest rate. I would rather go with the 10-year fixed. So there's a little bit of different options you can use there. But these are just some insights, guys. I mean, you get into this whole entanglement if you get a loan, and most people are going to get a loan. I mean, who has $100,000 plus additional emergency in their savings account? Not most of society. Most of society is not going to look to purchase these properties. You have to be mindful of that when you go to sell them. So some things to think about. And then, of course, you get wrapped up in an HOA again. Most of these RV lots that I've seen have an HOA. You could buy a raw piece of property if you don't want to be entangled with an HOA, but then you're going to have to put, in most cases, utilities on it, which means you're going to spend a few $1,000s to get utilities, electric. Electric is your main utility you need. And then if you wanted sewer or water. And when you buy a piece of property, usually you're not going to be able to purchase by the beach. You're not going to be able to purchase a raw piece of property in a nice area by the beach for $100,000 in Florida. And you can go inland and you could purchase a nice piece of property for $10,000 if you go into the middle of nowhere. So, but you have to decide, where do you want to live? That location plays a big part, and the amenities that come with it. And if you're going to have a piece of property by yourself in the middle of nowhere that you're going to put utilities on, or if you want to be by the beach and you're going to be in this shared community with shared expenses. It's all a matter of what you personally like. Again, live below your means. But I wanted to share some information as I go on my journey, as I look at a possible home base. I've been living out of my car for 2 years. And an RV lot would seem like an option to get a home base without the full entanglement of a house, less maintenance, less aggravation. But I'm not sure. Either way, I wanted to share this video with you. Stay inspired. Peace and love.